The broadcast is now starting. All attendees are in listen-only mode.
Okay, hello everyone and welcome to today's webinar. There's still one or two people trickling in, so while that happens, please just take a moment to read the disclaimer on the screen at the moment. I also need you to have a quick read of this one as well, please, before we get started. Okay, with disclaimers aside, we can get started. So hello and welcome to today's webinar on automated trading. We're going to go through a very high-level overview of automated trading aimed at the individual non-professional trader. And specifically, I'm going to talk to you about why you might consider automated trading, how to get started, and how to deal with some of the major obstacles that you'll encounter. I'll also demonstrate some tools that I think represent a great way for individuals to access the benefits of automation in their trading operation. In particular, the tool that I want to show you enables you to get started quickly by taking care of the nuts and the bolts of automated trading, like simulation, broker connection, things like that, so that you can focus on researching and testing your trading ideas. And that's really not a small benefit by any means. And the tool I'll show you enables you to get started quickly, but it has one major difference to most other retail level simulation and trading tools. And that is it doesn't place limitations on what you can do and the ideas you can turn into trading systems, or at least you won't come up against its limitations anytime soon. So who am I? My name is Chris Longmore. I'm a professional full-time trader. I work at a proprietary trading firm where I'm responsible for applied machine learning research. My job, which I love, is to use machine learning to extract signals from interesting data sets and turn those signals into trading strategies. I've also been a quant trader at a hedge fund and founded a quantitative analytics consulting company where I was lucky enough to consult to some of the bigger fund managers here in Australia and the broader Asia region, mostly on the strategic adoption of machine learning technology and how it can improve trading outcomes. But what's really interesting about my journey into professional finance is that I'm actually not a finance guy. I never studied finance at university. I never worked for a bank. In my previous career, I was actually an engineer and an environmental scientist. A while back, I became interested in the markets and quickly realized that automated trading was really the only sensible way forward for me. But at the time, I had a hell of a lot to learn. And after what felt like a huge amount of effort, I started seeing some success with my trading, and that gave me a foot in the door, essentially. And I found myself working as a quant trader at a hedge fund as a result, which is where I really got my start in the professional space. And so because of this experience of transitioning from one industry to another, I really know firsthand what do-it-yourself individual traders are up against, and how much information is out there that needs to be waded through to really get anywhere. Having seen both sides of the fence, I know firsthand that making it as an individual trader is much harder than as a professional, which might surprise you. But as a professional, you have access to great execution, expensive and information-rich data sets, and other team members to help you out with things that you don't yet know how to do. And so because of this huge disparity, I started robotwealth.com, whose mission is to try to level the playing field for do-it-yourself and non-professional traders. Robot Wealth's main offering is a series of courses in algorithmic trading, which contain the knowledge and the skills that enabled me to transition to a career in finance. But more than the courses, we're also a community of algo traders. We interact on a daily basis, help each other with our trading systems research, and even find projects to collaborate on together. If that sounds like something you could benefit from, please check us out at robotwealth.com. There's a special offer on an annual membership thanks to FXCM, which I'll cover shortly. So the intent of this webinar is really just to introduce you to some high-level concepts around automated trading. It's really a huge topic, but today I just want to keep it fairly high level and talk to you about why automated trading is a sensible approach to the markets. I'm also going to give you some practical tips for getting started as quickly as possible. But I also want to tell you about some of the major obstacles you'll face. And lastly, I'm going to show you some very simple automated trading in action. I'll code a strategy based on a well-documented market anomaly, and I'll connect it to FXCM via their API. In order to connect a trading algorithm to FXCM's API, you'll need to have an account with them. It can be either a live account or a demo account. But by opening a live account, you can access a 50% discount on Robot Wealth annual membership. And I'll provide some more details around that at the end of the webinar. So if you're attending this webinar, most likely you know what automated trading is, but in case anyone out there is uninitiated, automated trading is simply the electronic buying and selling of financial instruments. To do that, you need a networked connection to a counterparty, an exchange, a broker, liquidity provider, and some means of automatically generating buy and sell orders. And that typically involves a computer program, ingesting real-time data, and making trading decisions based on that data. It can be as simple as, say, sampling a price feed every hour, calculating some moving averages, executing buy and sell orders on the basis of their crossing. Of course, it can be much more complex than that. You can receive data from multiple sources. You can have complex analytical capabilities and trading logic. And of course, there's risk management systems as well. And that's before we even talk about the infrastructure required to communicate with a counterparty. We need some way of sending messages, receiving messages, handling errors such as unacknowledged messages or connection dropouts, which can and do happen. And if you think all that sounds pretty complex, well, you'd be absolutely right. You can see that the trading logic itself is just one small part of the overall trading system. And we haven't even mentioned the technology and skills that you need in order to perform research to come up with some good and valid trading logic. We'll come back to that complexity in a little while, but before we do, I want to talk to you about why that complexity is justified and why, despite the difficulty associated with it, automated trading is really the only sensible option, in my opinion, particularly for independent traders. So in the professional space, the trend towards automation is significant, and it's been going on for a long time. Recent statistics suggest that up to 80% of the trading volume on the London Stock Exchange is automated. The CME, which is, if you don't know, is a futures exchange out of Chicago, there's some research there that suggests that well over 50% of all futures volume is automated, even in some of the commodities that are traditionally manually traded, like the grains and the metals. And it seems like that trend is only getting stronger. So why this shift? Why is the smart money taking this approach? Well, I believe it's because automated trading overcomes many of the inherent limitations of a human trader. For example, computers process enormous amounts of data. They can scan dozens or hundreds of markets for opportunities. Humans are prone to error, be it calculation or just sending the wrong order or the wrong volume to market. A computer obviously has no emotional or subjective attachment to a trade or to a particular market. Computers also execute consistently and continuously. Compare that with a human who is limited to maybe a few hours of trading per day, suffers from fatigue, maybe even wants to have a social life. So personally, I view the automated approach to the markets as a means of allocating tasks to the resource most capable of performing them. I may have given you the impression that humans are becoming obsolete in the world of trading, but that's absolutely not true. They just have a different role to play. So just as we saw that there are many things that algorithms and computers are better suited for, there are lots of things that humans are brilliant at. For example, we have the creativity to view the markets in interesting ways. We can come up with new ideas for trading systems. We can perform research, stay abreast of macroeconomic and geopolitical developments in ways that a machine can't. So if you go down the automated route, using algorithms to trade the markets frees up the individual to pursue things that are more meaningful and are more relevant to their skill set. I don't know about you guys, but I really don't get a lot of joy out of staring at charts all day, and I'm actually not very good at distilling meaning from them either. My time is personally much better spent researching new systems and overseeing existing systems than looking for and executing trading opportunities. But another really nice byproduct from algorithmic trading is that you end up with an automated scientific research and development environment. Because if a trader writes an algorithm for executing trades in a live market, it is then possible to test that algorithm on historical or even synthetic data before you take it live. And that's really crucial feedback about how the algorithm performed in the past. And it also provides insight into when, where, and why it might fall over. You just don't get that sort of feedback with a manually traded or a discretionary system. But it's not all upside, unfortunately. So obviously I'm firmly in the automated trading camp, but of course there's always another side to every story. So some of the main drawbacks to this approach include the complexity. It's really not a trivial thing to research, develop, and execute a trading system, or one that makes money at any rate. There's a large range of skills that you either need to acquire personally or rely on others to provide. Programming is the obvious one, but it's also really useful to know about statistics, finance, market microstructure, economics, computer hardware, software, networking. There's other tools out there like optimization and machine learning, which are incredibly powerful and require specific knowledge to use appropriately. But the message I'm trying to get across there is that algo trading is actually really difficult and it requires skills from multiple disciplines. You also need to think about infrastructure considerations like backup power, backup network connectivity. Less of an issue these days with managed private servers and cloud-based infrastructure, etc. But definitely something worth considering. Another big problem for individual traders is time, or rather the lack of time. I recently surveyed our Robot Wealth members to find out what their most significant obstacles to deploying trading systems were. And over 60% of our members quoted a lack of time as the single biggest obstacle. Because it's a complex undertaking and it requires this broad range of skills, it's not typically something you can just decide to do and achieve immediate success. You throw into the mix, a day job, maybe full-time study plus family commitments, not to mention a social life. Time becomes a really significant limiting factor. And this is important. I'll touch on this a little bit later because there are a few intelligent shortcuts that you can take. Not everything is has a shortcut available to it, but there are some ways you can be a bit intelligent about that. There's also this misconception that floats around from time to time that automated trading systems can be simply set up and then forgotten about. But look, it's really not the case at all. Managing such a system is a significant amount of work. It takes a lot of oversight. Ideally, if you're trading intraday, you'd monitor it in real time. That's unlikely to be possible for people with full-time jobs. So you'd at least want to have alerts sent to your phone or to your email, when trades are entered or closed, or when there's some problem with the system. You also need to be reconciling your trades, preferably on a daily basis. And that includes reconciling your actual and your theoretical fills, checking that the trades are actually being entered according to the logic that you intended, because bugs creep into computer programs and trading algorithms are no exception to that. And then you also need to, of course, monitor the performance of the system to make sure that it hasn't deviated from your expectations. And an important one as well that gets overlooked often is to monitor your actual performance against the simulated performance. And you can get some deviations when the assumptions that went into your simulation are a bit off. So the message there is that it's not set and forget. There's a lot to be done behind the scenes. So in terms of getting started, a good place to start, or I think the best place to start, is to set yourself some reasonable expectations, both in terms of financial rewards and the time you'll need to devote to what is really a difficult journey. I don't know how long it will take you specifically to achieve your goals, but it's fair to say that you'll measure that time in years, not months. So do really spend some time thinking about this. It's a big commitment. Ask yourself some honest questions like, are you really up for a multi-year journey of learning, perseverance, commitment? And it's a journey that won't pay off anytime soon. If you're not up for that, you probably want to consider other ways to make money. The thing with algo trading is that to stick with it, you really need to be the sort of person who gets a kick out of learning new skills, particularly when those skills are related to technology. And that's because you probably won't be rewarded financially quickly. So you really need to be getting something else out of the journey. Otherwise, in my opinion, you're unlikely to stick with it. And if that's not you, and there's absolutely nothing wrong with that at all, it just means that you'll probably do better trying to make money in some other way. I'm not trying to put you off, and I hope I haven't, but if that hasn't put you off, the first thing you need to do is learn to program if you can't already. There's really no two ways about this. If you can't program, you'll never really be able to do any serious algo trading. There's some drag and drop software on the market that promises that you don't need to learn to code, but in my opinion, that's not really a serious long-term solution. And people get put off with programming because, obviously mastery takes a long time, but you'd be surprised how easy it is to get started. Even if you've never programmed before, you can be up and running with your first program in less than an hour of leaving this webinar. And that's just by following some really basic online tutorials. I'm going to show you an automated trading tool that's based on the C programming language, which admittedly it's not the easiest language, but in my opinion, it's a great place to start because you end up being forced to learn a little bit of computer science as well, just because of the nature of the language. And that really sets you up to understand some simpler languages like Python in much more depth than you would otherwise. So in short, you can't really go wrong with C, even if you only spend a few months on it. It'll make you a better programmer in the long run because you're forced to learn some fundamental programming concepts that you might skip otherwise. I love Python as well. I use Python on a daily basis, but I'm really glad that I started with C. But that aside, the message is really get started learning some programming. And even if you fail as an algo trader, you'll still acquire what I believe is an important life skill. So beyond programming, brush up on your statistics as well, or start from scratch if you've never studied that field before. In particular, you want to pay attention to inference and the nature of the biases that can creep into a research process. And this is useful again because even if you never get anywhere as an algo trader, you'll still come away with some skills that I think make you a better person. You'll see parallels between the biases in your trading systems research and the biases in the way that you view the world around you. And you can't help but end up being a more critical and mindful thinker, which I think is a pretty good outcome. The other message I want to give you is don't wait until you think you're a great programmer before you start algo trading. And don't wait until you think your algo is perfect before you deploy it, at least to a demo or virtual environment. You can trade your algo on these risk-free environments with no cost to you. Most brokers will provide one. And simply going through the process of connecting your strategy to an account and watching it trade will give you more feedback and useful information that you'll get in probably many days of research. That feedback is really valuable. But the other side of that coin is that I'm a firm believer in the power of doing and getting started, but also in starting simple. So don't start with machine learning, complex optimization, using multiple exotic data feeds, as tempting as it might be. You'll honestly just end up frustrated. The best place to start is with simple trading logic, traded at low frequencies, using approaches that have support in the literature, or at least some form of economic basis. For example, one good way to start, I believe, is using relative and absolute momentum, both of which are supported by a decent body of literature, rely on simple measures of price change to detect trading opportunities, and they're usually implemented as low frequency strategy as well. There's really nothing exciting about these approaches, these strategies, but I do think that they're the perfect place to start. I spoke briefly before about shortcuts, and for time-poor independent traders, one of the smartest things you can do is acquire some tools that enable you to take some of these intelligent shortcuts. As I mentioned, there's not a shortcut for everything, but here are some things you can do that will save you a bit of time. The first one is use a ready-made broker connection, especially if you're new to programming. Connecting your algorithm to a broker can be a bit of a nightmare. APIs make this easier for people who've been around for a while, but if you're new to this sort of thing, it'll be a struggle and it'll be frustrating. The tool I'll show you shortly has a connection to FXCM straight out of the box. The other thing you want to do is try to get your hands on some useful simulation tools. So if you go down the path of writing your own simulator backtester, you'll quickly realize that it's a huge task. It's a monumental amount of work to write a backtester and write a good one. but there are some good tools out there. They're not all good, so be discerning in the choices that you make. The first thing you want to consider is simulation accuracy, which is absolutely paramount. If your simulation of your trading strategy isn't accurate and reflective of reality, then any decisions you make will be flawed. Accuracy is a tricky one. It's actually very difficult to achieve. You'll also want a solution that is fast, and by fast I mean both execution runtime and also research efficiency. It should really allow the user to focus on the trading system itself, not the nuts and the bolts of the simulation. And it should be relatively powerful as well. The last thing you want is to invest a bunch of your valuable time learning to use a new tool only to come up against limitations pretty early on. And lastly, an important one for independent traders is that the simulator should also be the execution tool. And that's because we can then use the same script that we use to develop and backtest the strategy in production, which saves time and errors. So the tool I'll show you ticks all of these boxes. And of course, it's not the only tool out there. And I have no affiliation with the product other than being a big fan. It's an excellent choice for independent algo traders in particular. It's free to get started. The free version has very few limitations and it's very affordable to use, the commercial version. I really don't know any other tool that ticks all of the boxes so well. So the tool that I want to show you today is called the Zorro Trading Automation Platform. At the end of the day, I don't really mind which platform you use for research. As I said, there's plenty of tools that will do the job. What I'm much more interested in working with our Robot Wealth members in particular is demonstrating a good research process. But Zorro is a great tool for independent traders to get started with. It's an interesting product because the developer's primary business is actually not selling trading software. Their primary business is actually researching and developing trading algorithms or performing research on the financial markets for their clients, which are typically hedge funds and financial services providers. They actually developed this tool in-house specifically to do that. Its development was fully funded by an early client of this company, and as far as they're concerned, it's been paid for. And for their own reasons, they chose to make it available to the wider community. There's a free version and a paid version of the software. The free version does almost everything the paid version does. It only puts a limit on the size of the trading account you can trade with it, which was $7,000 the last time I checked. And that means that that you can start using it for free. And if you never develop any profitable trading systems, then you'll never need to pay for the commercial version. But there's a downside to this business model of theirs, which is admittedly a little bit quirky. And that downside is that the documentation for Zorro is really not great for beginners. It's basically a technical reference document. It's short and to the point, which is perfect for people who are experienced programmers and automated traders. But beginners will certainly have some frustration with the documentation. But it really is worth persevering because the tool is fast, accurate. It makes it really simple to perform research once you've got a handle on the syntax, used for both research and trading. I couldn't imagine a better way to start for the individuals. But of course, it does have its limitations, and some of those limitations are, if you're doing order book style strategies, you might find it difficult. The software isn't open source, which is a bit of a downside, but that may change in the future. But at the moment, it means that you can't see and modify the source code. It's also limited to several brokers out of the box, but you can write a plugin for trading with anyone that's got an API. You can trade with FXCM's API with the free version of the software, which is a great solution because through FXCM's API, you can also access a library of high quality historical data to use in your research. I think that's something that not many people are aware of, that FXCM have data back to the early 2000s for most currencies and index CFDs, which they make available free of charge via their API. So this is what the Zorro interface looks like. As you can see, it's quite an austere piece of software, but it's very utilitarian, I guess. Version 2.0 is in the works, which will have some major improvements. There's 3 sections to the interface. The upper section, which is titled Broker, relates to obviously the broker and the account that Zorro connects. It's mostly used when you're turning Zorro into a trading engine, but in simulation you can also simulate different account conditions by simulating different brokers. The middle part of the interface is the strategy section, where you can select a script that contains the code for the trading algorithm that you want to simulate or trade. You can also select an instrument, a bar period, and there's some sliders there that you can set up to provide external input. There's a bunch of buttons that are reasonably self-explanatory. Help opens the documentation, edit enables you to edit the currently selected script. Test runs a simulation. Train runs Zorro's optimization engine, which I'll demonstrate as well. And trade connects Zorro to a broker and begins trading the current script. So this is the strategy that I'm going to code for you today. The strategy is based on absolute momentum, which momentum is probably the most well-documented market anomaly. There's some research there that I've referenced that I recommend you check out if you're not familiar with it. The strategy that we'll trade today uses what's called absolute momentum, which is essentially the momentum of a single asset price itself over some formation period. It's simply the price at the current period minus the price some time ago, and that time is the formation period. And the trading logic based on this strategy is we go long if absolute momentum is greater than 0, otherwise we hold a short position. And there's only one parameter in this whole strategy, and that's the formation period, F, or how far back do we look in the past to calculate momentum. So I'm going to switch over to a Zorro environment now and code this strategy for you. We'll end up with a complete strategy in around 15 to 20 lines of code, and also have a look at at the equity curve and some performance statistics. So here's my Zorro interface, and here's the skeleton of this strategy that I'm going to code for you. The way Zorro simulations work is that they run in essentially a giant loop. So the script, the code that we write, will get executed every time one bar closes and a new one opens. So the first thing we want to do is provide some parameters that control the setup of the strategy. So things like the start date of the strategy that's in year, month, day format. Likewise, the end date. And look, no doubt the syntax here is going to look a little bit like gibberish to many of you who've never seen this sort of coding before, but please, I just ask you to take a leap of faith with me at the moment and just go through the process, and hopefully you'll see how simple it can be to research in this environment, and also how powerful the tool can be as well. So in addition to the start and end date, we also need a bar period. Bar period is measured in minutes, so we're going to set our bar period at 1440, which corresponds to a full day. And we also need a look back period, which I'll come back to this parameter in a moment. So one of the strengths of this Zorro tool is that I mentioned that the nuts and the bolts of the simulation is really abstracted from the user, which enables you to focus on the research and the development itself. There's a really neat way that Zorro handles time series. And this line of code will create a series of closing prices stretching back as far back as the look back period. So that close object there, that now contains 160 previous closing prices, and so that little line of code there is actually accomplishing quite a lot. The other thing we need for our momentum strategy is the formation period, which we're going to provide as a parameter. And to do that, we might do something like this. I'm going to start with a formation period of 80 days, and we'll probably change that and have a look at some others as well. In order to actually do the momentum calculation, we can use a function that that Zorro has built into it, and that little calculation looks like this. Which is really nice. Zorro does all, with that little function, mom function, Zorro does all the heavy lifting for us. And besides that function, there is a huge range of technical, statistical, machine learning, signal processing functions that are built into Zorro, which makes it really super efficient to use. And of course, you can also write your own functions. So in those few lines of code there, we've set up our simulation. We've got all the data we need, and we've done all the calculations that we need in order to generate some trading signals. So what's missing is our trading logic. So in this example, we're going to hold a long position when our momentum is positive, and a short position when it's negative. And as you'll see, that is really easy to implement as well. So that's our trading logic right there, 2 lines of code. We're also going to set up some plot commands so that we can see an equity curve, and we can also have a look at this absolute momentum as an indicator style plot. So in order to do that, I use this plot function. I'm also going to adjust how the plot actually looks on our screen. And that's pretty much it. That's our trading strategy right there. Of course, if you've never seen C programming, this is a subset of the C language, I guess. But if you've never seen C code before, then everything I coded here probably looks like gibberish. But the point is that it's quite simple, and it requires surprisingly few lines of code to write a script for an idea that you can then test and simulate. So in order to test our strategy, we go to the Zorro GUI. We select the strategy that we just wrote, and we simply click the test button. And now, if I haven't made any errors, the simulation will run. We get some output in the window and some performance statistics. And if I click the result button, I'm going to get firstly a more detailed performance report with a whole bunch of statistics. And I'm also going to get this visual output, which there's a fair bit going on here, so I'll just explain what we're looking at here. The black line in the chart is actually the price curve of the underlying market that we're trading, in this case the euro-dollar spot market. The blue line that we see is the equity that the strategy has accumulated, and the red curve that we see is the drawdown of the strategy. And in the window underneath all of that is the absolute momentum indicator plotted. Also in the main window, we've got the green lines represent winning trades, and red lines represent losing trades. So we get quite a bit of feedback on our idea very, very quickly. In reality, you'll find that using this plotting function in Xoro is actually a little bit limited, but this is one feature that's undergoing a huge upgrade in version 2, and I know that the developers are going to release some interactive plotting functionality and just make this feature a lot more beautiful. So we'll also just have another quick look at the textual output. There's a whole bunch of detailed information here that I won't go into. I won't go over too much now, but I'll leave that for you to look at your leisure. But now that we've got our basic strategy and we've got a little bit of feedback, I want to show you some of Xoro's power. For instance, we can quickly run this strategy for various values of the formation period. So by simply changing this formation period to say 40, I can get some feedback on how that would affect the strategy. You can see there I've got a different result altogether, a very different equity curve. If I use a longer formation period, 150 days in this case, and click test, I get some more feedback. Again, a very different equity curve. Another thing we can do very quickly with Xoro is to test our strategy on some different markets as well. So at the moment, we've selected the euro-US dollar spot market to run our strategy on. But we can just as easily ask it to simulate how the strategy would have performed on the pound-dollar market, maybe dollar-yen as well. Let's throw the Aussie in there for good measure. So all obviously very different performance depending on the asset that we chose. So I'm just going to go back and select the euro again. Now, another really powerful feature of Xoro is that as well as looking at individual single markets, we can run this strategy for a portfolio of assets. And that's done with quite a simple line of code that I'll just put up here. So that simple line of code there, while I'm sure it looks like gibberish if you've never seen this before, is actually accomplishing a great deal. It's running this trading logic for each of these 4 instruments at every bar. So we've just gone from having a single instrument strategy to now we have a portfolio strategy. And if we simulate that, now we get our equity curve represents the equity of the entire portfolio, while the black price curve represents the price curve of the asset that was selected in the scroll box, the euro dollar in this case. But the equity curve is the curve of the entire portfolio. So that's a really powerful feature of Xoro, that you can do portfolio simulations so readily. But I'm just going to go back to our original script. The next thing I want to show you is parameter optimization. So this strategy depends on a single parameter F, or formation period rather. And we briefly looked at how the performance of the strategy varies across a few different values of that formation period. But the obvious question arises is there an optimal value, pardon me, and can we find it? To do that sort of analysis, Zorro has a powerful parameter optimization engine that's built in. So I'm just going to briefly show you how that works. So the first thing I need to do is have this line of code which puts Zorro into optimization mode. And now I replace the value of my formation period with Zorro's optimize function. And the optimize function needs a default value, which we'll use our original value. It also needs a range of values that we want to test. In this case, we'll test everything from 40 to 150. And it also needs a step size, and I'm going to make that step size 10. So in this case, Zorro will test every value between 40 and 150, incrementing by 10, so 40, 50, 60, etc. And so in order to run this optimization, we simply click the train button instead of the test button. And you'll see Zorro run through a bunch of simulations, one for each parameter of interest. We'll go through and it'll tell us that if we round up to 100, we get the best performance. Performance here measured as profit factor, by the way. So I've got my optimal parameter there, which I'll now go back and plug into here as my formation period, and I'm going to re-simulate that. And there's my new equity curve with my optimal parameter over that data set. But the thing is, anyone who's done any trading systems development will tell you that selecting the best parameter from a training run gives you absolutely no assurance that it'll be the best parameter in the future. In fact, it's pretty likely that it won't be the best parameter in the future. This problem is referred to as overfitting, selecting a parameter on the basis of its past performance. And that can lead to some really suboptimal decision making. So what we really need to justify the selection of that parameter is an unseen data set, which we can then test it on to draw our conclusions. That's pretty easy to do in Zorro. We simply change the start and end date of our simulation in order to give us an out of sample period. But I want to show you something a little bit more powerful today. So I want to show you something called WalkForward Analysis, which many of you are probably familiar with. But a single out of sample test is rarely the best way to analyze a parameter. There's a problem that we only have one out of sample or clean data set, and if we keep on iterating our parameters and looking at the out of sample performance until we find something that works, we'll eventually find one that does. And that process is called data mining bias, and just like curve fitting, it can lead to some really poor decisions. And there's a few ways to deal with that problem, but one of the ways involves getting a little bit more feedback by using WalkForward analysis. And WalkForward is essentially a periodic re-optimization. You break your entire data set up into regular intervals, and then split those intervals into training and test sets, ultimately stringing together all of the out of sample periods, which results in a dynamic out of sample test. Really useful tool. Obviously, it's not the be all and end all, but it is a great tool, and we can implement it in Zorro simply with this line of code. So now I'm telling Zorro to split my simulation data into 10 walk-forward cycles. And when I hit train now, oops, hang on, I need to tell Zorro what to optimize. And now if I hit train, you'll see that Zorro will go through that training process a total of 10 times. And as it's doing this, it's saving what it thinks are the best parameters for each out of sample period. And then when this is finished running, I'll test it. And Zorro is smart enough to be able to string together the correct parameter or the selected parameter and line that up with the correct data period as well. So these are our walk-forward results for this strategy. And that's what our equity curve looks like. So you can see that the length of the back test is shortened somewhat, and that's because we lose some data at the front end of the simulation when we do walk-forward. But it's a more robust way to measure the performance of your trading strategy. But the point here was really, I just wanted to show you how simple it is to implement what is actually quite a complex process in Zorro. We're nearly at the end, we're nearly out of time, so I'll keep moving along. The last thing I want to do with Zorro is connect it to FXCM's API, which really couldn't be easier using Zorro. The developers did all the hard work by writing an FXCM plugin that takes care of all of the communication with the broker. You simply need to enter your username and your password and select the correct broker from the accounts drop-down menu. And in order to connect and start trading, all I need to do is click trade. And you'll see Zorro here go through a process of requesting access to this account, trying to connect to the server. If all goes well, the grayed out square up here in the server window will turn red and then green when we have a valid connection, which we do. And now you'll start seeing this price update in real time. Before it starts updating, actually, we were actually loading some price data here. So you know how we had 160 days in our look back period? Zorro is now downloading that data from FXCM server so that it can start trading at the next bar. And that's all there is to connecting Zorro to FXCM using the built-in tools. But the last point I wanted to make about that, which I mentioned previously, was the free data that you get, even with an FXCM demo account. Zorro comes packaged with a pre-written script that enables you to access and download and convert the FXCM data into a format that Zorro can use. So you're able to build your own library of market data for backtesting. So it's an incredibly powerful tool. Also, considering that it's a free resource as well. It's not widely known, but it's incredibly useful. So I'm rapidly running out of time. That's about all I have time for today. What you saw here was a highly compressed introduction to algo trading and to Zorro. I hope I gave you some things to think about and demonstrated that Zorro is one of these rare tools that can actually provide you with some sensible shortcuts. Even if the scripting looked a little bit like gibberish, I can assure you that you will learn that incredibly quickly. There aren't many shortcuts, so I really encourage you to consider the ones that are available. Yeah, in the time we had today, I really could only show you Zorro at a really high level. I probably raised more questions than I answered, but we really just scratched the surface. But I hope it was a deep enough scratch to demonstrate what's possible with Zorro. So that concludes the webinar. If you'd like to learn more about Zorro and some of the other amazing tools for individual algo traders that I'm familiar with, including some of the skills and knowledge that enabled me to join the finance industry as a professional trader, I'd love to welcome you into the Robot Wealth community. You can find out more about us at robotwealth.com, and if you open a live FXCM account, you can actually access a huge 50% discount on the annual membership, which will save you over $260. We didn't have time for questions for today's webinar. Apologies for that. If you do have any questions about the webinar, please drop me a line via robotwealth.com. I'd love to hear from you. Thank you.